let's start off by looking at oil, because oil is actually acting with a lot of volatility like a meme coin. I mean, look at oil. If we zoom out a bit, a few days ago only, oil has been trading pretty consistently at around about $60. I mean, it went up also before that. You can see it went up here to about $85, but has been on a general downtrend. If we go on the weekly, we can see that we have been going down on a downtrend to all the way down to around $56. And just looking at what happened over the last few days, oil has actually jumped up massively. It went up like 90%, and it went all the way up to $120, but now has recovered immensely. I mean, look at this volatility. If you look at it on the hourly, we can see that oil went down all the way to about $81, recovered again. So it made a jump up again of like 12%, then back down and then back up again. So if you are buying, if you have bought oil in the last few days, you actually outperformed Ethereum hodlers over the last 8 years. So I find it very interesting. And the reason why oil is actually performing the way it does is because a few reasons. Obviously, we have the war happening right now. And firstly, crude oil hit $120 per barrel, but now the prices fell below 100, and we can see right now they're at around $86. The reason they came back down is because the G7 countries, they hinted about releasing $400 million barrels of oil from their strategic reserves. And of course, that is good news for the markets. That meant that we're possibly going back up. Also, the Strait of Hormuz is closed. And if we look at the Strait of Hormuz, we can see that as Iran is occupying it and not allowing ships to pass through, all these ships, they're stranded over here. And 20% of global oil actually flows through the Strait of Hormuz. And as that is obviously blocked, that means a lot of supply shocks and prices going up. What does that mean? Well, the price of everything goes up, right? The price of fuel, the price of food, the price of clothing. So basically, we have a lot of inflation happening as a result of this. And as wages do not increase at the same time, this means that eventually it's not good for the system and prices will go up. And this means also that it puts pressure on Trump and puts pressure on the war to end sooner than later. And if we look at, for example, how much the US has spent already just on the Iran conflict itself, it's over $10 billion. I think it's going to be much more actually, based on how much money they spent on transporting these vessels from the US to different continents to the Middle East. And as this number goes up, this means the national debt of the US also goes up. As the national debt goes up long term, that is very good for Bitcoin, of course, as the monetary system that we are in will eventually collapse and we're shifting to Bitcoin. Now, let's look at the S&P 500. The S&P 500 I had mentioned looks rather bearish at the moment, because look at this. We have always gone up like this into an ascending wedge and then fallen down. Same thing happening last time and same thing happening this time. I drew this a few weeks ago and it looks like we are hitting a top and we are starting to go down. Now, if we compare this to Bitcoin, the blue chart is Bitcoin here, we can see there's a clear correlation. Bitcoin starts to go down first and the markets follow. Now, obviously, there's a strong correlation here, and I'm not saying that the markets drop because of Bitcoin. Bitcoin follows the 4-year cycles, but we can see last time here, Bitcoin started going down and the general market also follows. Same thing happening right now. Bitcoin is going down, has actually started going down obviously in about October 2025. And I think that this year, especially the next few months, are going to be rather bearish and we're going to follow Bitcoin, or at least we're going to go into a recession. This could be a good starting point right here to go into a recession. Now, finally, I mentioned the US debt is accumulating. Let's look at Bitcoin. Well, Bitcoin, I've had a sell position here at 74,000. The reason it's at 74 is because it's previous support right around here, previous support. Now, I didn't actually manage to sell anything and I still have the position open. I'm hoping to sell at 74,000, whatever I accumulated at 70,000 a few weeks ago. And the point to look out for is 72,000. Why 72? Because it is the local high. Look at this, 72,000 right around here. Let me draw this in for you guys. 72,000 is around about here. We have had a breakout, but reached about 74 exactly. Now, hopefully we're going to surpass 72,000 to get to 74 but I think still we are in a downtrend. Like if we zoom out for Bitcoin, for example, we can see we're clearly in a 4-year cycle. We had the double top here, we had the double top here, and we are in a bear market right now. And also what's happening in a bear market always is we have a clear pattern here. Look, we form a double top compared to the last cycle. We form a double top, ascending wedge here, we go down. Same thing last time. Then we have a symmetrical bearish pattern, which we eventually break down from before we create our lowest point. And this is the moment we are in right now. We have had that ascending wedge. Now we have this bearish sideways moving pattern, which I think we're gonna move down from, maybe touch 72 again, but move down and eventually hit what I think will be the low of this market at around $50,000, which is here the previous resistance and support at around $50,000, which according to history, we're gonna hit most likely September to October of 2026. Now that is all for today. We're gonna talk again tomorrow. See you guys tomorrow. Bye.